Hi there, keen traders. It's been a very exciting day today with the ECB breaking below, the euro breaking below that key trend line and that 134.50 level. Now, if we can hold below this, it will be a good indicator for a continued push downward heading into the Fed heading into the payroll, non-farm payroll report tomorrow. Let's take a look exactly what happened in the Euro USD and how the stacker trade would have been playing out so far to this date. And I have to say it's pretty phenomenal, actually, to tell you the truth. This is what we have. Initially, as I said yesterday, we would have had this break push down lower. We would have had a break of the low right, break of the new high right there, new low right there. Would have entered our first trade short at 157.39, and your stop loss would have been at 158.11, which is going to be up here from this trend line lower. Next day, you would have moved it down to 157.75, just following it, and you wouldn't get another chance to move down, but you'd move your stop to 137.33, then move your stop down to 135.87. And then you can see you had a lot of congestion, but yesterday you would have had another entry ahead of this, and you wouldn't have been hesitant to take this entry because you would have already had so much profit locked into this trade. And you see that the entry point would have been at 135.33, and your stop would have just been up here at 135.85. So you would have risked 50 pips, and boom, had that push lower. And you can see that push lower, and you can see now that the new low is right here at not an insignificant level, the 50 fib level at 130.92, and that gap closed. So a lot of traders are jumping into this. All right, so what we're looking for now is, I posted out earlier that we were looking for a buy-in at that 134.40, 134.30 level, but that's before the pair moved down another 60 pips this in early trading. And honestly, I never expected it to rebound this much, but now we have to have our orders in, and it's as simple as this: have an order to go short at the 50 fib level here from this move lower. And what does that come in at? 134.11. So I have an entry order here at 134.11. I have an alarm just so I know, but this is all automatic, and because this is more than 100 pips here, what's 135.24, that'd be 111 pips of risk. I'm just doing 100 pips, putting my stop here at 135.11, and that's the whole trade, and that's the setup, and you hopefully continue to scale into this position as it goes. Let me close my window right here in my office. 1 second. Have some construction going on outside. All right, so now you can see that this trade is pretty set up. Unfortunately, we're not in the entire move, because if we were in the entire move, we could have 137.39, 137.39. We'd be down here at 134. We would be up 370 pips in that entry, and we'd be up 153.33. We would be up about 130 pips in our second entry, and we'd be trying to scale into the third trade. And I've noticed for most of these trades, the duration of the trade is about 20 days, at most 15 days. This trade would already be in 7 days, and most entries are normally 4 to 5. So we're getting towards the end of this move, where I'm not saying it's not going to continue to move down lower, but it's a good chance it pops up. And non-farm payroll is going to be a dangerous number heading into tomorrow anyway. So we'll see what happens. But I have my entries in, and looking for the next trade would have to be a move lower on this 132.92 level, which we could see a lot of consolidation in the short term. In this trade, and let's see the Great Britain USD, just another one we're trying to do the stacker in, and this pair, no clear direction. Look, we have a top here that is exactly equal at 162.50, and we have a low here. What is that low at? The low is at 158.93, and the low here is at 159, so it's actually a higher high. So let's see the high. Let's see. Well, it doesn't matter. We're talking a couple of pips here. So right now, right here, there's no direction. There's no reason to jump in this trade right here, because in the broader trend we're doing nothing. We are trending sideways until we get a break of this 162.50, or like I said, this 158.75. There's nothing to do. You just remain sidelined in that pair at the moment, and we'll see what happens. Something will give either way, one way or the other. Let's look at the trades that we could have had today could have had today, or if any trades in our 50 fib back method. I basically have been pretty busy checking out this new trading style this week and haven't been focusing on it, and it actually would have been it would be up about 150 pips as of yesterday for the week. But let's see here. So we see that we get a push down lower, and I wouldn't have entered any trades ahead of the ECB, I'll tell you that right now. So it looks like we would have got it looks like we had a push lower here, and then we could have had an entry here at 158.56, looking for a push up to that 159.27, and you know what? We didn't quite get it. The high was 59.26. I don't know if you would have closed there or not. That would have been a judgment call, and then it came all the way back down to break even. That would have been a heartbreaker right there. Heartbreaker right there. In the short term, I will go through and post all these setups, and I can tell you right here and now, because I remember watching this one. I'm actually been working from home now because I had some difficulty at the office, but I know I watched this. Computer problems, the internet was down. It's probably up by now, but let's see. All right, so you can see we had a clear break of this trend line right there with the ECB news, so there's really not an entry there on that trade. And the Euro New Zealand and the Euro AUD, I mean the Great Britain New Zealand and Great Britain AUD just have been doing nothing lately, and until they start to move a little bit, there's really nothing to say or do at this point. I guess we're going to have to go to the layout file, layout, open. New Zealand, New Zealand 7. That's going to be exactly what we want. There we go. Peachy trade right here, but you wouldn't have entered this one either, because you can see we had the move down, the big swoon down, touch the fib, but on such a move that you want to wait for a clear entry, and your clear entry comes in at 169.26, and your target's 169.43. So there's really no reason to jump into that trade, but at least the ranges are going to expand. In the Great Britain New Zealand, you can see in this pair that is a workable trade here. You can see that the pair moved down lower. The pair moved down lower on the news. You had a key reversal right here at 191.56, and the pair closed out shortly after at 192.43. So that would be a nice 140 pip move that we could have locked in, and we'll definitely keep our eyes open for these trades. And I'll show out. I'll send them text out with the hypothetical, not a text, send out an email with the hypothetical back testing for the week, just so everybody knows. But I am definitely focused on these stacker trades now, because what's great about them, you put the trade in, forget, you guys can go to work, you guys can do whatever you want. You can go play water polo if you want, and everything will and then everything will be pretty automated, and the results are up for the Great Britain USD on the blog, and the Euro USD I have it all, but I just don't have the daily risk. I'm going to go ahead and do that right now, and I'll try to post that later this afternoon, and then I'm going to look at a few other pairs. All right, everybody, have a great night. Have the orders in for the Euro, and not going to do any trades ahead of the Fed tomorrow. So see you guys around 8 o'clock. Everybody, great night. And if you have any questions, don't hesitate to send me any questions or anything on the Twitter feed, or you can send them directly to me with the email address on the blog. All right, talk to you later.